Usually when we see someone's uncle or someone's mom doing the books, they're just doing everything on a cash basis, but it doesn't really give you a true kind of depiction of how your restaurant's doing. They're not really like understanding like my POS, or they're not understanding our payroll. They're just like booking things as they see it in the bank account.
Let's be honest, when it comes to restaurant books and bookkeeping, a lot of operators are just trying to stay on top of receipts, invoices, vendors, and making sure you're getting paid correctly by third-party delivery apps. It can be a lot.
And so we kind of cobbled together this system in QuickBooks Online with third-party softwares, and we were able to build a little bit of our own. And I was like, oh, like this is really easy. I'm managing my own books with a minimal effort. We should start doing this for other restaurants.
Our guest today is Ryan Handel, a restaurant pro who set out to get a handle on the numbers for his own operation and ended up building a bookkeeping solution that's now helping thousands of others do the same. Even as the co-founder and CEO of FIXE, he's the first to admit that managing restaurant finances can be a real pain. But they don't have to be. With the right numbers in the right software, everything just runs smoother, from smarter decisions to stronger margins. It might not be glamorous, although there's something to be said about a color-coded spreadsheet. But the right accounting solution just might be the secret behind your winning growth strategy. I'm Rachel Stanton Marcus, and this is Science of Service, the podcast where we uncover the strategies behind building successful hospitality businesses. Whether you're a seasoned operator or just starting out, you'll find insights and inspiration to help you thrive. And if you're looking to get the best out of working with restaurant bookkeepers and accountants and discover how the right tools, systems, and partnerships can help fuel your finances, stick around. Ryan's bookkeeping solution, FIXE, that's capital FIXE, was launched in 2019, designed to take the friction out of finance, from streamlining vendor payments to translating raw numbers into insights operators can actually use. Made for hospitality folks by hospitality folks, it's a support system built on serious industry know-how. And it all started with a summer job, a love of hospitality, and a decision to go all in on the business from day one.
For some reason, I had always wanted to go into it. So I remember when I was 16, my dad said, hey, if you want to really go into this restaurant industry, you should probably work at a restaurant first to see if you like it. And so, through some family friends, I was able to work at a restaurant over a summer. And then from there, I was all in. And so I went to school at the hotel or hospitality school at Cornell University. And that's kind of like where my hospitality career kind of got started. And I've been in it ever since.
What was your favorite part of that first restaurant job? What got you hooked?
I just love the fact that it was like ordered chaos, right? It was like the first 2 weeks were definitely a little bit of a rude awakening, getting up super early and being on your feet for 8 to 10 hours a day. But after you got past those first couple of weeks, I was thrilled with it. I just love the fact that every time you came in, you had something new to look forward to. And you also got to see kind of like instant satisfaction when you've done a good job with your guests, or in the case of the kitchen, when you've done something well and made some good food as well.
We've all experienced that ordered chaos. Honestly, it really is a crucial part of the hospitality magic we all can't seem to get enough of. But falling in love with hospitality's energy was just the beginning for Ryan. Turning that passion into a career or even a business was a whole different challenge, one that got started with a restaurant chain in LA.
They had a flagship location called the Grill in the Alley, which is in Beverly Hills. It's still there today. And then they had a more casual version called the Daily Grills that at the time had probably like 20 or 30 locations. So I worked my way up over a couple of years, became the GM of a couple of locations, helped train managers as well. And then in 2009, I kind of said, hey, it's time to start my own thing, right? I partnered up with my partner at the time to open up our first restaurant. I wanted to be the next like Chipotle founder, right? So I tried to open up like a fast casual restaurant. It did well. We opened it up in 2010 and we got it to about 5 locations. and it went well. I mean, we knew how to operate well. I think our menu was probably a little more complicated than it needed to be for a fast casual restaurant. And we were able to expand and get a little bit of notoriety and hone in our systems. But eventually, COVID came and our catering and to go business that was awesome kind of went out the door a little bit. And so that's when we started to pivot a little bit before COVID, but that kind of accelerated it. I still own one of those five locations. Two of my other locations I had converted into this other concept called Tacos 1986. We're now up to about, I think, 8 locations right now, with a couple more on the way. And of course, FIXE does the bookkeeping for them, but Victor is the main operator. So I'm kind of their de facto CFO, so to speak, and I take more of a back seat, but they run the operations in the restaurant, and I kind of view it from a bird's eye view.
The magic of hospitality might thrive on a little chaos, but unfortunately, when the numbers start piling up, the chaos isn't quite as charming. Those day-to-day pain points, they add up fast. And it was one of those real-world finance frustrations that helped inspire the creation of FIXE, a way to make managing the books a whole lot easier and a lot less painful.
I had originally tried to do the bookkeeping on my own, and I just didn't have the time to do it. I've always been like a numbers guy, so I thought I could handle it pretty easily, but I didn't have the time in the day to do it, right? And then I'd gone through a variety of bookkeepers, one of which was the former CEO of Grill Concepts, had started a company as well, and I was using that. And ultimately, I felt like I was paying too much money for what I was getting, especially like my sales volume, right? Like we were doing like $1 million a year. We were just like a sandwich shop. So I shouldn't be paying the same price that a restaurant that does $5 million a year is paying, right? And so in 2018, when technology started getting a little bit better for bookkeeping and restaurants, I tried to implement some new software. And my bookkeeper said, hey, like, I got to learn this, even though it might save me some time. I'm not going to pass any savings on to you, and I'm going to make you pay for the software. So at that point, I was like, screw this. I got to figure something else out. So my wife's cousin, Scott, who's now my partner, he's a financial manager by trade. And he's like, look, I can help with the bookkeeping, but I know nothing about restaurants. And I was like, look, I know everything about restaurants. I'll help you with this. And so we kind of cobbled together this system in QuickBooks Online with third-party softwares, and we were able to build a little bit of our own. And I was like, oh, this is really easy. I'm managing my own books with a, minimal effort. We should start doing this for other restaurants. And at that time, I was like, bookkeeping is kind of an unsexy industry. Let's spend some money on marketing. Let's put a cool website together. And so then FIXE kind of officially launched in October of 2019. And that's when we kind of got off and running.
FIXE was born from real industry pain points designed by people who truly understand how hospitality businesses actually run. Between Ryan and his leadership team, they bring over 100 years of combined restaurant experience to the table. So they know exactly what it takes to keep a business running smoothly, how to fine-tune performance when needed, and the quickest way to cleanly drain a grease trap. Quite the trifecta. Their goal is to take the complexity out of bookkeeping and accounting, giving operators clearer insights without all the usual headaches. But even aside from headaches, there can be blind spots too.
Ultimately, when you get like someone's Uncle Vinny to be doing the books for you or something like that, right? They're just like, hey, like this is easy. We're going to just throw all the deposits into income and all the expenses into some type of expense account. But what's not telling the full story is that person probably doesn't understand all of the nuances with like the POS system, which every restaurant really has to have these days, and all the nuances when it comes to like paying vendors and the timing of the vendors and the timing of the payroll, right? So it's really giving like an inaccurate picture of how the restaurant is performing. Restaurants by nature, you have to look at financials on an accrual basis because ultimately you may be paying invoices 30 days later, but those invoices were, happening during a given time frame. And usually when we see like someone's uncle or someone's mom doing the books, they're just doing everything on a cash basis, but it doesn't really give you a true depiction of how your restaurant's doing. So the pitfalls are like, hey, someone's doing the books, but they're not really understanding like my POS, or they're not understanding our payroll. They're just like booking things as they see it in the bank account. And that really like is only going to get you so far. And it probably will get you into trouble at some time because you're not really knowing how the restaurant's performing. You're just seeing how much money is coming in and out of the bank.
Are there any benefits you would say, like any business situations where a restaurant would benefit from a cash basis versus accrual basis? Or do you just feel like across the board, it just makes more sense, especially if you want to grow, to do accrual?
I think for restaurants in general, I think it has to be an accrual basis just because of the nature of the beast of restaurants. The only time any of our clients look at anything on a cash basis is when we have a few catering clients that have really far in advance accounts receivable. So they may book an event and they don't get paid for that event until way after the fact. Granted, you need to look at it on an accrual basis to see how you perform during a given time frame, but you also need to look at a cash basis because at times your cash flow could be severely impacted by the timing of the collection of those events. Restaurants in general don't have that issue because, the credit cards come in the next day or the third party comes in a few days later. And so ultimately, I think that 99% of our clients look at it an accrual. A couple of them will toggle between cash and accrual just because of what I just described earlier with the catering clients. Look, I think restaurants, when they start, they're kind of by nature looking at cash because they're probably running their restaurant by how much money is in their bank account. And so in their mind, they're running it in cash. But in the end, they got to be looking at accrual.
So, in case you need it, here's a quick Restaurant Accounting 101. When Ryan mentioned accrual-based accounting, he's talking about a method that gives you a much more realistic snapshot of your business performance. Unlike cash accounting, where you only record income or expenses when money moves, accrual-basis accounting recognizes revenue when it's earned and expenses when they're incurred. That means if you've booked a catering order for next week, but the payment is COD, the income still gets recorded today. Same goes for your vendor invoices. The expense hits your books when the goods come in the back door, not when you pay the bill in 30 days. For operators, this approach gives a clearer view of profitability and cash flow timing, especially in a fast-paced, sometimes chaotic environment like hospitality, where money coming in and money being spent rarely line up neatly. And it's not just about accuracy, it's about control. And if you're making decisions on thin margins, control is everything. That said, how are you supposed to wrestle control of the books when your budget might not have much wiggle room for professional support?
Yeah, so I think like bookkeeping on its own should help. I think it should be an organizational tool for the operators. They shouldn't be kind of at odds with each other, right? And so, like, if you're a mom and pop restaurant or you're a small group, the bookkeeper needs to help keep you a little bit organized, hold your feet to the fire a little bit, help pay your vendors on time, and then help get some administrative tasks off of the plate of the restaurant owners or operators so that they could focus on running the business. And then eventually, the job that they do should produce some type of financial information that allows you to understand and run your business better. Now, as you evolve and your bookkeeper eventually maybe turns into a controller or a director of finance or CFO, then they could obviously provide analytics and forecasting and all of those things. But at its core, a bookkeeper should help you stay organized and give you information that you need to process on how your operation is doing.
And can you talk to me a little bit about how a strong bookkeeper or a strong financial partner can help your business grow more strategically?
Yeah, I mean, ultimately, a strong bookkeeping partner, I think nowadays, is someone or a company that really understands the technology that is going on in your restaurant. I think The majority of what they call a restaurant's tech stack eventually has to get touched by the bookkeeper because it has some role or element that has to do with the financials of the restaurant. So I think nowadays a bookkeeper doesn't have to drive every component of the tech stack to the restaurant, but they need to know all of it and they need to know how it all works together to kind of paint the picture on how the restaurant's performing. And then on top of it, hopefully that software allows everyone to stay organized. It allows everybody to keep the business moving along in the direction that it needs to go to. So that way, when you get to 3 or 5 or 10 locations, you're not scrambling around saying, like, we don't have a system that works or nothing's talking to each other, right? And so that's where I think like a bookkeeping partner more or less almost becomes like a consultant.
If you're bringing in support or tech to help with your finances, you need it to add value, right? Just like hiring for any role, whether it's back of house, front of house, or choosing a new system, it has to make things run smoother. So, how do you plan for that? And what should you actually be looking for when it comes to finding a great restaurant bookkeeper or accountant, aside from color-coded spreadsheets, of course?
Being that we're in the restaurant industry, I would hope that they are restaurant specific.
Yeah.
This is an interesting industry in the sense that we have very specific systems and the way things talk with each other between a POS system and the way vendors get paid and the payroll systems. And then, especially when it comes to nuances like tip reporting and the third party apps with DoorDash and Uber Eats, like those are all variables that, again, could cause a lot of headaches to people that are not experienced in this industry. But ultimately, you want to have a bookkeeper that, like I've said in the past, really is almost like a tech advisor.
Mm.
I think we have to be very diligent and say, like, look, we know these are like the 8 or 10 things that need to be consistent and that work really, really well. But we also know there's going to be 1 or 2 things that we want to be a little bit flexible from client to client on because of that nuance. And sometimes, and I can't tell you enough, as we get to like move with like bigger restaurants, they end up leaving their bookkeepers because their other solution was just too stubborn and they didn't want to budge. They didn't want to adopt newer technology. They didn't want to allow some customization. They didn't want to do things that made the restaurant's life easier. And then the last thing is transparency. If you have a bookkeeper that is like not letting you see things and is you have to wait days before you get a report, or you're not getting, anytime you ask to log into QuickBooks, they're like, oh, we don't want to share that, we'll just give you the report. I don't think that's for you, right?
Yeah, I think that's actually a really important point because I know in the accounting industry, not even just restaurant specific, there's a lot of rigidity, there's a lot of control because obviously you're dealing with your clients' numbers. And if their numbers are wrong, like their business is wrong, that's high stakes environment. So I think that's a really important piece of having that transparency and kind of being able to be flexible when it makes sense for your client because restaurants are so dynamic. They are all different. Even if it's the same concept, each store is going to operate even a little bit differently sometimes. What do you think are some questions that operators should ask or keep in mind when they're hiring or vetting a bookkeeping or accounting provider?
First thing is obviously like access to the financials. Like, how often do I get them? How often, if I want to log in and browse around myself, do I have that ability? 2, do I have an account manager that's available to me? Restaurants, as much as we want to automate, at times they're going to say, hey, I need to talk to somebody. And we don't want them calling like 1-800 support. We want to give them something to talk to, right? So I think that's important, and a little bit of hand holding from now and again helps. And then what technologies are included in what you do and what technologies are not, and how do you guys make the operations of the bookkeeping easier on me as an operator so that way I could focus on running my business. And if that bookkeeper doesn't have a great answer for that, maybe it's not the right one.
Yeah, I think too that kind of like daily aspect of what's going to be expected, like with invoices. Are you expected to just hang on to them and the bookkeeper will come pick them up? Can you upload them into some kind of system? Like that kind of day to day, what's the expectation to maintain this relationship from your side is a good level setting question to ask.
Yeah, exactly, exactly. I love, in the past when you would have to like send invoices in an envelope and things like that. Obviously, with new technologies like Margin Edge, it's not necessary, right? And so it doesn't really happen as much in demos nowadays. But in the beginning, their clients would be like, "Wait, so like, are you going to be coming to our restaurant and picking up the invoices?" Like, no, like this is how you do it. Like, you just take a picture on your phone and it works great.
Getting your numbers right in hospitality isn't just about balancing the books for the sake of your accountant's sanity or the IRS, although that is very important, make or break, some might say. It's also about having the right information at the right time, shown in a way you can make sense of to make those smarter decisions. But not every accountant or bookkeeper is aware of or equipped for the realities of what life is actually like for operators running a busy restaurant. Ryan found that out firsthand when he was in the thick of operations, navigating outdated reports, delays, and advice that just didn't make sense.
When I took over the books from the old firm that I was using here in LA, and I finally looked at my balance sheet and I saw it was kind of like right at the onset of all of these third party apps kind of coming popular. And in fact, it was the beginning of like realizing, okay, we have revenue coming in, but we don't have money coming in right at that moment. That money is coming in at a future date and time. And so ultimately, when I got my balance sheets, my bookkeeper did nothing to try to get the information correctly and like figure out how much money was owed and not owed. And I'll give them a little bit of benefit of the doubt that I don't think Uber's dashboard was like that good at the time.
Yeah.
But I got my balance sheet and I was like, shit, like I'm owed a bunch of money from these vendors. And I'm like,
Yeah.
what am I going to do? The truth is, I wasn't owed a lot of money from the vendors. I was just underreporting the revenue on the P&L side. And so like it wasn't accurate, right? And so
Mm.
that was like a big thing on my side that I've seen. Another big thing that happens is like a lot of these third party apps, depending on what state you're in, they'll pay your sales tax for you, but it
Mm.
changes in every state. It's not the same. And a lot of times clients will all of a sudden they've been paying sales tax and they've been paying double sales tax because Uber paid the sales tax and then they thought they had to pay it too. And I was like, no, Uber's paying it for you. You don't need to do it. And then they're like, oh,
Mm.
we could have saved a lot of money. I was like, yeah, you could have saved a lot of money, but hindsight's 2020.
Hindsight is 2020, but here on Science of Service, we like to think of ourselves as hindsight heroes. Okay, that name maybe needs some work, but the point still stands. The stories we share are here to help so you can be at least a little bit more prepared for the headaches and hopefully before they start. So far, Ryan's given us plenty to chew on. Why clear numbers matter, how accrual-based accounting gives you a sharper view of your business, and what to look for in a good bookkeeping partner. But there's more to cover. Up next, we explore how to get even more value from those relationships, what to ask, what to share, and how to build the kind of collaboration that helps your numbers tell the full story of what's under the hood of your business.
I think there's elements of what we can provide as advice as a bookkeeper that are helpful to operators, but I also think there's a limit to it, right? Like,
Yeah.
I know just from my own experience, I could probably tell any restaurant, this is what you need to do a little bit better or do a little bit worse or whatever it is. We don't change anything in your POS system, but we will say to the operator, hey, this something's weird coming in from your POS system. Something is not categorized correctly, or it's looking a little wonky. Can you take a look at it? Or, hey, like you're not using this function in the POS that would make our life easier and your life easier. A perfect example is like a paid out function. When restaurants go to the market, they could plug in a payout in the POS. Instead of just taking cash out of the till and going to the market, they could actually put it in the POS. So I think it's important for us to advise on the systems that like we're interacting with. And then we could provide some guidance along the way in that way.
What do you think operators can do to make life easier for their accountant or bookkeeper? And how will that, I mean, in turn, likely that would lead to better business decisions, but kind of flipping that coin, what can they do to make that relationship better?
Yeah. I think one, obviously providing information is helpful, right? And
Yeah.
giving us the right access to the things that we need to do the bookkeeping is helpful. But I'll give you a perfect example. So I think everybody's trying to save money. Like, I'm not going to argue with anybody trying to like reduce costs, but not every cost is worth reducing, right?
Mm,
We have a client, they have about 8 or 9 locations. They're switching payroll companies. And the new payroll company wants to charge extra to integrate into our accounting system, QuickBooks Online, right? And it's kind of an old school system. I still laugh on why they're even charging extra for it. But the operator's like, yeah, I didn't want to pay for it. And I said to him, like, why don't you want to pay for it? If you don't pay for it, it's going to cause us a lot more work. And either I charge you more money or you're just going to get your financials late because it's going to take forever to get this stuff done. And then, like, right away, he was like, okay, I'm going to pay for it. It's like, yeah, you should pay for it. Like,
yeah.
I get it. So I hate when operators make a decision. They're like, I'm already paying the bookkeeper. They'll figure it out. And I'm like, we could we don't charge like an arm and a leg for what we do. We want to give like streamlined pricing. But streamlined pricing also comes with streamlined processes, right? And if you don't have
Yeah.
streamlined processes, we can't charge you streamlined pricing.
Right.
So if you're not willing to work with us on that and take like a couple of leaps of faith with what we're trying to do, it ain't gonna work for you, right? So that's something I would implore the operators to understand. Like, hey, like listen to your bookkeeper and say, like, if you're demanding a lot from them, then you need to be able to work with them on giving them what they need to do their job correctly.
Yeah, I can imagine it feels kind of similar to like dealing with like an unruly guest, who expects a ton of stuff but isn't willing to make any compromises or be agreeable. That makes perfect sense to having a good relationship. It takes give and take, right?
It does take give and take. Exactly. You can't have like the best pricing and the best service and the best everything and not like give a little for it. It doesn't, every negotiation, both people have to win.
Running a hospitality operation means no 2 days or locations look exactly the same. So it makes sense that a little flexibility is a necessary requirement. Even within multi-unit groups, every store might have its own quirks and processes that show up in the books and will require a bit of tailoring. And when your accountant or bookkeeper isn't familiar with your concept or context for each store, that relationship needs some give and take. So, what else do you need for a good working relationship? And what should your expectations be, especially when it comes to checking in on your numbers and staying on top of the financials?
I think it's important in the very beginning to like just understand where all the buckets are going. Even with us, I always like to say we're really knowledgeable in restaurants. Like, obviously, if you go to like the grocery store, we know what that is, and we could always Google it and figure out where that stuff needs to go. But you never know. Like, you never know. There could be something weird and we just didn't know about it. And so I think in the very beginning, it's super important to like review where those buckets are going. And then once everyone's comfortable with the way like the P&L and the balance sheet is kind of flowing, then it could be on a less routine cadence. What I would say though is that where a lot of people are getting, forgetting to look or maybe are just misguided, so to speak, is understanding how their balance sheet works. And so, look, our account managers and our bookkeepers are very, very knowledgeable and they understand how the balance sheet works. But a lot of the restaurants, they've never seen a balance sheet, right? And especially nowadays with all the third party apps with like Postmates and DoorDash and
Yeah.
tip reporting and sales tax, like I can't tell you how many times I see a restaurant's books and like, oh, like the last person had no idea what they were doing because there's all these massive liabilities or massive amounts of money that you're owed that they didn't report correctly. And so you want to make sure that you have a grasp on what that looks like as well, because it could severely impact, your financial performance.
Yeah. What's one thing most operators overlook that could save them thousands?
I mean, there's probably a lot of things. Ultimately, here are two easy things that I think operators didn't realize that they had leverage in these days with DoorDash and Uber Eats. There is more leverage to negotiate with them than you give yourself credit for, right?
Mm.
So your commission rate, which used to be dictated by them, you have a little bit more wiggle room, I believe. And especially in bigger cities like us in LA and New York City, if you have a good enough concept and you haven't done it yet, you also have the ability maybe to go exclusive and then get some additional money out that way. It's not for everybody, but it could be a benefit to you for sure. The other thing that I think you have a little bit more wiggle room is with your vendors at times. So look, not everybody, you can't get everything out of the vendor and expect it to go perfectly. The vendor has to make some money sometime
Yeah.
also, right? But I think some of my more successful restaurants, when it comes to dealing with their vendors, is willing to take the pricing that the vendors present to them. However, they demand a rebate, every quarter or every month. And I think you can do that with your vendors. If you're willing to say, like, hey, like, okay, here's the pricing, and that's fine. If you're willing to not just nickel and dime every single pricing with the vendor, then you can demand other things from the vendor, such as a rebate or guaranteed delivery at a certain time or things of that nature. If you're just going in for the best possible price, then you're going to lose on all of the other benefits that you might be able to get from that vendor. So if you allow, like in any transaction, in any negotiation, both sides to win, you might get a little bit more out of it than you expected.
Throughout this series, we've heard from founders, CEOs, and even a CFO about how great planning unlocks revenue, fuels growth, and funds expansion. And if there's one thing they all have in common, it's keeping a close eye on the numbers. Ryan's no exception. He's a big believer in building strategy on solid financial foundations. But if you're after the simple, actionable target to aim for in your business, grab that Sharpie you've been hiding from the rest of your team, because this piece of advice is well worth jotting down.
Your prime cost, which is your cost of goods sold and your cost of labor. And in a fast casual restaurant, you could argue your cost of packaging as well should be under 60%, right? So I don't care if you're a steakhouse and you're selling steak at 40% cost with a 20% labor, or you're a bakery that's doing, 20% cost, but it's costing you a lot of dollars to make that bread. The combination of all that has to be under 60%. If you get to under 60%, you're probably going to have a profitable restaurant as long as the next component is in line, which is your rent. And your rent typically you should target 8% of sales, right? So I had a recent client that says, hey, I have this spot I'm looking at in Ventura, and, it looks great. How much should I be paying for this? And I'm like, don't think of it that way. First, think, how much sales do you think you can do out of that space? And then take whatever sales that is or are and multiply it times 8%. That's what you should be paying for the spot, right? And so 8% is the typical rule of thumb. You can make the argument in New York City in some higher volume, maybe you get to 9 or 10 because there might be some efficiencies and some other costs, but 8% is the general rule of thumb. So 60% for prime costs, 8% for rent is, from a P&L monthly standpoint, what you need to be targeting.
As your business grows, so does the complexity behind the scenes, especially when it comes to your finances. What you needed at 1 or 2 locations won't necessarily cut it when you're running 10 or more. So what kind of financial support makes sense as you scale? And how do you make sure your systems and your accountant keep up?
One, you want to make sure you have a system that is working, so that way when you open up location 2 and location 3 and location 4, it's just a flick of a switch and you can replicate it pretty easily. Obviously, you want to make sure you have systems in place where buckets can be clearly identified. So I'll give you an example. And even my own restaurants, I kind of argue with my partner about this. I don't love the way we're spending money on our credit cards right now, right? We have one corporate card, but we have 8 locations. And so it's very difficult to understand which expenses for which location. So I think making sure that you're setting yourself up correctly, maybe giving up a little bit in the way of credit card points or a couple of other things to make sure everything is cleanly and neatly organized will obviously help in identifying how your operation is doing across multiple locations. The biggest thing is, as you grow, you want to be able to cleanly and easily identify the performance of each individual location. The more times you start paying one expense on behalf of everything, it becomes a lot more difficult to try to like isolate what each individual location is doing. And then eventually, I like to say, and I think we recently talked about this in a blog, if you get big enough, if you get to like 6, 7, 8 locations, and maybe you're doing 8 to 10 million a year, at that time, it's probably time to bring in like an in-house controller or administrator, because we love working with those as well, because they have a little bit closer ear to the ground on all the movements of money. Eventually, that is a worthwhile expense as you grow.
Okay, final question. Running a restaurant and leading FIXE, your days are obviously very packed. If you could wave a magic wand and have a whole extra day in your week to just spend on one area of business, what would you focus on and why?
So if I was still operating my restaurants, and for me, it would be probably completely analyzing and understanding my food costs and recipes, because I don't think when I was operating, I ever did it that well. And then for FIXE, it's more about like figuring out from an engineering standpoint, additional bells and whistles that we can provide to our clients in order to make their life easier and to convey the message correctly to our clients of like what we are trying to do. So it's a little bit of marketing and it's a little bit of engineering.
Just easy, light,
Yeah.
super simple.
Yeah, totally.
Thanks so much to Ryan for joining us today and walking us through what it really takes to build better financial foundations in hospitality. From turning day-to-day frustrations into a tech solution with FIXE, to sharing practical tips on partnering with bookkeepers and scaling financial support as your business grows, there's a lot in here you can hopefully bring back to your own operations. So you'll find links and a few extra resources in the show notes, just in case you're ready to love your balance sheet a little more, or at least fear it a little less. I'm Rachel Stanton Marcus, and if you enjoyed this episode of Science of Service, please rate, review, and subscribe. And if you know a fellow operator who's still scrambling to keep track of all their paper invoices, and especially if they're ready to turn those invoices into revenue strategies, maybe give them the gift of this episode. Thanks again for listening, and we'll see you next time.